we have a big gap down, like minus 1.5% for the S&P 500. But if during the first 5 minutes, 10 minutes, 15 minutes of the market opening, it could have a big tail and eventually just close near the high, and suddenly you see that a lot of the stocks, especially those showing the resiliency, means that they're showing the outperformance, they could just be the first to turn up and also lead the rally as well. So just pay attention to any kind of the signs that is going to have a reversal for the markets, and that could be the one of the best time to just enter, especially right after this rinse and wash. Okay, so for example, at this point, this is the S&P 500. It just break below the previous low. Okay, so it just barely just a spring. Okay, at this point, so it's just a temporary commitment intraday below this swing low, and hopefully if it could just come all the way back above and close at a high, I think that would be relatively bullish. So right now, we have this kind of the accumulation structure is still valid. Okay, so this is a accumulation structure at this point, and we have a commitment above, so everything looks generally bullish and is ready to go, break above, attempt to the higher ground. But today's event will definitely prolong this testing consolidation phase. So the immediate support level or the minor support level will be the previous swing low level. So that's also helped by this gap area. So there's a gap right here, acted as a support. So first time it tested the gap, we have a swing, okay, going up. So second time, this is quite a heavy hand, gap down. So volume will be generally high. We'll see at the end of the day. And so that's just the minor key support level. But even if it breaks this level, so in my email, I talk about 6,900 level, which just sort of imply the gap level. So the gap acted as a support level. So if it could still close above 69 or somewhere around 6,900, this is still very, very bullish. Means so far, this is the structure. We have a minor sign of strength rally, and this is just a consolidation. Okay, so the consolidation is somewhere between 7,000 to maybe 6,850. So that's just consolidate between these two levels. However, if it fails, means suddenly it just drop a lot of the supply level. Okay, so it just closed right at the low, and most likely it's going to test this zone. So this is the zone that's acted as a meaningful support. So tested a few times. We have a test right here, another test here, another test, multiple tests, rejection, acted as a support. So naturally, if it comes back down to 6,800 to about 6,750, this is where the demand should show up. Okay, and then we could expect at least a bounce or attempt to bounce. So how good is the bounce is the questions. So we need to assess the quality of the demand and also the quality of the rally. So that's only when you actually break and commit below this 6860, so somewhere around here. So last Monday, Tuesday, it spans at least 4 sessions here. So this is a 4 sessions commitment above the key level. Okay, there's a resistance that's turned the support level. So holding up as the support, and we also spot the demand tail right here. And volume doesn't look that threatening. That's generally just low volume. And although we do not really have this kind of the sell off or even here, but this is just relatively low compared to the past. So that's generally a good sign. However, today's gap down just changed this, but I'm not that bearish yet, at least for now, because first we still have the first level of the minor supports that will be around 6860. So that will be the first support level, 6860. So if it could still bounce up and didn't close below, there's still a chance for it to bounce from here. So something like this bar, okay? So even this bar just break below this key level, but next bar is just shown up as a doji bar with spike of the volume, and then demand come in to confirm that there is actually demand come in right here. So again, previously has proven as a demand zone. So this is where the demand show up. So naturally, we could expect the demand come in here again, but we'll need to assess the supply. So later or today's is relatively important. We could just assess how much supply it will just attract and draw up, because we seldom have this kind of the big gap down, okay, for quite a while. We although we have a gap up right here, but for this kind of the gap down is also a bit rare. So we have a gap here, gap here. Let's go up, another gap here going up, but this is a gap down. So it probably suggests something has changed. At least it would prolong the trading range, so it wouldn't just go up and break out too soon. Okay. So that's the S&P 500. And in terms of the immediate direction, so right now is testing the minor support level. So if it could um, close above this 6860, so close above the swing low level here, 6860, it's likely going to set a temporary bottom and then have another attempt to rally tomorrow and attempt to fill up the gap as well. But if it close right below and came with quite a aggressive volume, high volume, then next support level will be around 6750 to 6800. So suggest that it's still going to come down to test this level, test the zone. So it doesn't really violate the bullish structure even if it comes back down to 6800. So in the worst case, means it could just break below first support 6860, second support 6750, and then it could just come all the way back down to test here. Here, if it suddenly initiate this kind of a sell-off, then we'll need to reassess the supply level and also the characteristics of the downswing. Okay, so at least let's just analyze and monitor it swing by swing and day by day. So first level 6850. So second level will be the zone 6750 to about 6800. That's S&P 500. So medium term, there will be still a trading range. Well, it will prolong this trading range, but long term, this is just a strong uptrend with a trading range with a accumulation bias.